Hi, Warriors. Sinatra, Michael Weissman, AJ, how are you? Brand, thanks for the hail. Team, how's everyone doing?
Good morning, Dale.
All right,
Morning,
how are you?
Coach.
Morning, everybody.
Hey, guys. So let me start with you, Kman. They checking rates?
Checking rates. We are in Japan.
Yeah.
I haven't heard anything specific, are they? I mean, I may have missed it then.
No,
Okay.
I think it's Coach just hoping so after seeing the little bit of a move that we've seen overnight.
So, but we stopped bang on the level that I have been highlighting for the past, days now, in the mid 146s. Pretty important level to me on the dollar yen. We tagged it 146.55, I think the high. And now we're shying away a bit, also helped by the Chinese, who are starting to intervene a bit more heavily in the dollar China. They've been sending their submarines out again today. They are saying that they want to slow down the move, and then at the same time saying that they will continue their prudent monetary policy, and likely next week they will cut their LPR. So I guess we are now more rangy than straightforward.
Yeah, that's a big candle.
Yeah, that is one. Yeah, they came in, and
It's the
it's
biggest candle on the chart.
Yeah, and it's quite funny because we stopped just under, and they came in just under the level where the top of the band is in dollar CNY, which today is at around 735 compared to their fixed as 2% above or below their fixing. And they came in right when we were threatening to tackle it in CNH. So I guess they are watching both. Thinking that the dollar is going a bit too fast, and yeah, so they stepped in. Now we're going to see what the next move is. Still above 727.28, which is the intermediate support, and then but back on the yen. No, I don't think we had any specific comments, but it just stopped, and with the lower dollar CNH, it's helping dollar yen correct a bit. I hope for a deeper correction. I really do. Yeah, let's see what happens there. And this whole CNH thing helped Aussie, Kiwi, even the CAD, the Rand. It helped the market to stabilize a bit in the dollars as well.
It helped silver too.
It did.
So you see, are you starting to believe that there's some correlation between US dollar yen and metals?
I'll leave that in the middle there.
Okay.
Just the dollar.
All right. All right. Anyway, so okay. Well, maybe it's the dollar move. Silver, I still think it's will have some legs. I think that maybe we have to be careful with the dollar bullishness now.
That's exactly what I said in the room not longer than a few minutes ago. This feels like a day where we have to be a little bit on our toes regarding the dollar, because I can see many trying to fade this rebound in the Aussie, Kiwi. Sterling is a bit higher as well. The metals also. So I can see quite a few people trying to fade this, and if the stops are too close, getting hosed.
Yeah. The S&P indices, this should be relief for them. I'm not impressed.
No, that's true. That is true.
Okay, so I mean, I'm not impressed at all. I think that it would have to recapture initially. So we ended the throwover in S&Ps that we've had working for, since the summer when we took out this wedge line. And then we held it. We had a false signal here, but now we're back underneath it. That opens up the door. Pretty good drubbing yesterday. So we'll see. I don't think it's over. You'll have to get back over 440 to stabilize.
Yeah, absolutely. And it would be nice to see the test and the confirmation that it caps up there.
Yeah,
It would actually be good to see it.
Yeah. Yield's a little disconnected from the end today. We're almost at new highs.
Yeah, we had a peak above 430 this morning in the tens. But yeah, I mean, we are going to have these kind of days, I think, because it FX sometimes disconnects, and those are the more dangerous days for counter trading or trading simply on the back of yields. You know, those are the more dangerous days, I think, in FX.
Okay, well, if this is a triangle, this is weekly chart, and we had the breakout of the triangle, then this was 4. And, you know, for anyone who's looking for a peak in rates, that's hope that this is 5. It's usually a terminal thrust out of a 4. So we'll see what happens. We're not going to confirm. What was this high?
You're going to have your specialist will talk you through it. I think Grega is on the line.
Yeah, I'm here.
See what I mean?
Hey, Dale.
Okay. Okay, specialist. How about you? I'm a generalist.
Yeah.
So I think you're looking for that to happen, aren't you?
Yeah, exactly. I think that we are in a 5th wave and that this may resume for the next month, maybe 2 months. And then I think that dollar index could potentially also slow down within this current recovery. I'm looking for big levels around to 105, 106 to be resistance for the dollar.
Can we pull back first?
Yeah, exactly. But can I share charts?
Oh yeah, I'd rather see yours. I see mine all the time.
Yeah, it's much easier
and welcome
for me
back, Grega, from holiday. Good to see you, buddy.
Yeah, it's been a time to come back, right? I mean, I was away when I was in webinar 3 weeks back.
Only
Yeah,
Ryan takes more vacations than you.
What?
No.
What about them Greek lot?
Look to the Greek side of the team, please.
Yeah.
Oh, that's just August. They're like that.
Okay.
You take them all year long, right?
Yeah. Okay.
All right.
So here's the big chart for dollar index. We came out of this triangle 2 months back. Then we just fell down here and we are now reversing back into the corrective phase. So I think that's the first leg of a 3-wave recovery. So as I said, 105, 106, that's the resistance that I would pay attention on for a potential new turn lower later this year. That's one interpretation. The another interpretation shows that we completed these 5 waves down already back in February, and that this sideways price action since then is just a higher degree flat correction. What's interesting about that, this is also the same resistance levels, 105, 106, right? So I'm thinking that dollar is just in a temporary recovery and that we will turn back to the downside later this year.
It'll take out 105 because that's where all the bears will capitulate. Got to get them out, Grega.
Yeah, let's hope we get there.
I think we could take them out.
Yeah, and if we look at the US yields, above we have US yields and below we have dollar index. You can see a very nice 5 waves up. And as you said earlier yourself, after 5 waves up, we can expect market to slow down. Personally, I thought that this wave 4 will be a little bit more complex and deeper back to the former wave 4. But since we have this major reversal for the US dollar, I just think that we are already in the 5th wave. So this goes very nicely with the potential bearish look for the US dollar for later this year or maybe starting 2024. So when these 5 waves up are done, that's when we can expect the dollar will move to the downside, because I think that there is a high probability that we will see here new highs for the US yields, but lower high for the US dollar.
Yeah,
Let's
okay.
go further.
Do you have a yield level there?
Excuse me?
The level for 5, potential objective.
4.5% to 5% around there.
Okay, thank you.
Okay, then we have also probably the most important chart when I'm looking at the US dollar is emerging markets. So it looks like that currently there are not, money is not flowing into the emerging markets, but staying in the US because of the higher US yields. But if you look at the pattern here, we have a pretty nice 5 waves up. And now looks like that we are in a counter-trend movement in the emerging markets. And counter-trend movements are made by 3 waves, right? A, B, C. So that was your wave A. wave B rally, and it looks like that we are now headed south for a wave C. So I think that very nice support here is still going to be retested around March levels. And that's the perfect time when, again, dollar index could potentially slow down around 105, 106 after we see a wave 5 high on the US yields. So I think that this will be quite important if we see a reversal on the response back to the upside from that 61.8%. I think that there can be a very massive trends going on around other markets as well. So 61.8% still has some room for more downside. So on the longer term, I think the dollar still will resume lower, but short term, there is more dollar strength. Also, looking at dollar Chinese yuan, we have a clearly ongoing 5-wave rise. Looks like it wants to take out this 2022 highs out. So for now, we should stick with this trend, and looks like that there is still some room for this recovery. And on the opposite side of this, obviously, New Zealand dollar, Aussie, gold, even S&P 500, CAD, all of those appears to be in this downtrend that will likely resume until we see this China turning around, and we know that this can take time before it may happen. So this one for now also suggests that dollar will stay strong. But after this wave 5 clears the 2022 highs, I would be very careful about the potential new change in trends. Also, looking at gold, again, we know that even if that's a correction from May highs, it should be made by 3 waves. And for now, that really does not seem like a completed 3-wave drop. So I still think that gold has room for more weakness here, maybe even can retest these wave 4 levels around 1800. Let me just adjust these pips here. So again, this is another market that shows that dollar could strengthen a little bit further here before it completes this corrective rally. Looking at the S&P 500, okay, so the S&P 500 is in the middle of this corrective rise, but I'm afraid that there is room for this gap to be retested here going back to June. It's also the high going back to August of 2022. So it's still an ongoing uptrend, but this corrective recovery, in my opinion, could extend it a little bit lower because we have 5-wave drop here on the S&P 500. And as I said earlier, we have the impulsive rise from the lows on dollar. So I think that this correction, even on stocks, will be even deeper. But not only maybe looking at the S&P 500, much clearer picture about the potential much lower prices could be German DAX. German DAX came to the downside after this wedge formation. And now we are testing this lower trend line of this wedge. So I think that after this wave B, which by the way could still maybe rally towards 16,000 next week, I would be looking for further weakness. So everything that I just covered suggests to me that dollar will stay in this recovery mode for maybe for month, 2 months or so, maybe more. But as I said, later this year or in 2024, I would be expecting a resumption again of the dollar weakness.
I'm with you, Greg. Give us euro, 103, 104, and I'm getting long like Donkey Kong down there.
Or 105.
All right, I'll even take 105. How about that?
Yeah, that was a very, 105, 106. Yeah, that was a very nice level here. Let me look. Very nice swing supports here from earlier this year. March and June levels, definitely very attractive after these 3 waves down are finished. So I think that we are in corrective phase, but since the euro also had a very nice impulsive run here from 2022 lows, I just think that this is temporary pause and that we will resume higher at some point.
I could not agree with you more. I could not agree with you more.
Is
Great
this
looks,
good or
Grega.
bad?
Thank you.
Okay, welcome.
Great
So
to have you
Dale,
back, bro.
Dale, we got about 15 minutes before the unemployment claims come and which might be a market mover, but we haven't heard from Ryan yet. I don't think that guy's working.
I'm always working, cheeky.
I'm just kidding, Ryan. I knew you were here lurking. Hey, Grega, thanks for the looks. I'm gonna take over really quick because I got a couple of charts that we need to be looking at. Benedict in our chat room just pointed out, the dollar index is right up against its resistance. It's something that Obviously, we've been looking at just monitoring the dollar index as we're approaching here. We're above the 200-day moving average, which you can see flirting with really, really big channel resistance at this point. What do you make of it, Ryan? Do you think the dollar is going to stage a breakout from here? I mean, Grega obviously thinks the dollar's got further to go. What do you think?
Yeah, I think that the dollar still remains the currency of choice at the moment. Call it risk, whatever you want to call it. It's still in favour. So yeah, we might see a little bit of easing off today. We'll keep an eye on the levels. Dollar CAD's mooching around that 135 area. A little tip under by a couple of pips. You know, dollar yen's now under 146. Is this the top, or is it just a little bit of a pullback because it's been pretty much one way for the last few days?
Yeah, it has been one way, and one of the I think one of the, well, there's a bunch of big deals right now. You look at the dollar Canadian, we almost hit the 618 retracement. The Aussie dollar hit the long-term support right here. This is the weekly chart from the COVID lows to the lows back here in October. We basically overshot it by about 20 pips following the jobs data, but you know, all you guys in Europe just came in and scooped it up this morning. Kiwi hit the 618 retracement, and we bounced pretty aggressively. As Kman pointed out, that the dollar yen finally finding a little bit of resistance, and that's the top of the intervention. The day that we got the intervention, it was right at those levels. So Kman hit that one really well, and yeah, you're seeing the dollar show a little bit of hesitation. But based on your view, what else? What could push the dollar higher at this point? Do you think could break it out?
Oh, what can break it out? Continuation of the data. We've got jobless claims coming in the moment. Philly Fed, the second manufacturing regional number of the new month of August. We saw strong data yesterday. If the data keeps continuing and everyone else is slipping and sliding, you know where the money's going to go to.
I'm a little hesitant here, and I think this is where, we're looking at the, positioning data via the CFTC. You still see people are pretty aggressively long the euro, and I guess, if you're looking at the dollar and you're like, the dollar's still in a downtrend, I'm just going to, if I'm going to add to my dollar shorts, I'm going to do it here, right? Because if you get much above this 200-day moving average and you start clearing that channel resistance, this is where it becomes a big deal. On the week ahead video this week, I said 103.70. That's the level. We went as high as 103.59. So you can see it's a descending trend line. So, it's there, and this is where the rubber meets the road, right? This is where the bulls and the bears really fight it out. And I think a big break in the dollar index above 104, that would put the euro. You look at the euro, that put us below like this support here. That's probably where, people start drawing the line, whether they're bullish or bearish. So real important levels with the dollar index. Dale, what do you think? Do you think the dollar is going to continue to break out here?
No, I'm looking for a pullback.
Oh, you are. So what are you going to be, if you're going to look for a pullback, where would you play it?
Well, you could just be short the dollar index. With stops, give it some breathing room over today's highs.
Okay.
And I think the pound has 28.5, 29 in it. I've been saying that for days. I still think that. And I'm just wondering when the euro will try and play some catch up. Because I'm only talking about 100, 150 pips in cable. And to get the Dixie down to say 101.5, you should get at least 150 pips from here in euro to the upside, and those are going to be great shorts. So these are counter trend. In fact, the only thing I've had trouble with this week is any of my counter trend trading, because I've been bullish a dollar a long time. But I've tried a few scalps, tried one in Aussie, tried one in cable. So the counter trend stuff, I would think by now I would learn to just leave it alone. but I've been risk off, and I think we'll see if the market can, get some relief. Grega showed a pretty good rally coming in S&Ps before we head down again. I've seen that count from other people too, so it's a possibility. But if the dollar does break out, you said what would do it? The yield's continuing higher to the upside towards the upper end of Grega's targets, 5% by year end. That would do it.
Yeah, that could definitely do the trick. We are seeing yields pull back a little bit here, but I don't know if there's any.
Well, with the dollar for a little while, maybe.
Yeah,
we'll see. Relief across the board. The wrecking ball. The dollar's a wrecking ball, so they're going to stop swinging it for a while, and maybe things like gold and silver can recover. Maybe 23.5 or so silver, 1940 gold. That's what I'm looking for. Counter trend moves should start working here.
So Ryan, I know you've been hot on the dollar Canadian. I'm still long. I haven't backed away from my longs yet. And the reason why is I'm looking at crude. I think crude, I think crude's bounce is very limited today to current levels. If you're in the ForexAnalytix chat room, you can actually see that you can see this dog with really awesome grills in our chat room. Thanks, Amir. I like that one. That one's great. But this is crude, and you can see, I think it's limited to this recovery. This is like previous support levels that we're attacking. So I believe that limited bounce that you're going to see in the crude oil market should allow for the dollar Canadian just to regroup, and you can see the dollar Canadian's finding some support off the 135 level. How do you feel about this dollar CAD here? I mean, do you still want to stay long? I know you were a little nervous about it the other day as we were, kind of hovering around this 135 level. How are you feeling about the dollar Canadian at current levels? I mean, I know it's gone a long way in a very short period of time. As a community, I think the ForexAnalytix community really got to capitalize off of this move. This one, through here. But do you continue to play that direction, or do you think that we're done here? Dunzo.
Yeah, well, a lot of us were piling in when it hit that low 131.50s, 70s. I'm still long from down there. I'm long in the 134.60s as well. I'm long 135.15s as well. You've always got to be careful when you get a strong one-way move that you got to be wary that you're going to get a decent pullback. What I do is I've been playing it more on the break trade, adding it. Did the same at 134. So this 135, I'm keeping a tight leash on it. If it moves down through 134.60, 70, that might spell trouble. If it holds 135 here, then we should go back to the highs. I've got a level 135.50, which it nailed on the head yesterday. So that's the battleground, 135, 135.5. It's going to do something in between there. But you've got to be careful when you get a one-way trade like this that doesn't have any decent pullbacks. The last decent pullback was that first touch of 135 that sent it back down through 134, and then we recovered from there. So a nice healthy refresh that was. But we may go down to that trend line you've just marked there. If we hold that, it gives it a nice springboard to carry on up.
Yeah, I think that's the 134. I think you were just saying 134.60. I think that's where that trend line would pretty much intersect. And I want to ask you this: how much do you think that crude oil is going to factor into this move from here?
It's a bit on and off, isn't it? The crude thing. You've always got to keep half an eye on what crude's doing. One reason why oil might bounce is because Citi put out a recommendation to sell it this morning. They pretty much marked the bottom. So that's one reason why it probably bounced back up to 80. 80.50 is my line in the sand, the close line in the sand. It's a bit of a pivot area. It was sort of a pre-level ahead of the 82.50. So that's why we're watching 80.50. If we get there, hold it, that keeps a downside pressure on, and then it should head lower, and we'll see dollar CAD heading a bit higher again.
Awesome. All right. Well, we got weekly unemployment claims. And by the way, I was looking, you know, ahead into like next week's data. I think if and I was telling, you know, traders this yesterday on the, I think it was the daily roundup or the week ahead, or I'm sorry, the morning edge show. You know, next week, if you're gonna take some time away, you know, it's the last week of August, pretty much. You got a couple weeks, I guess, but you have Jackson Hole at the very end of the week, which you know, that's what everybody's going to be kind of sticking around for. So I think the beginning of the week is going to be fairly slow going into next week. But you know, for us this week, you know, we do at least have weekly unemployment claims. So going around the horn, and I think it's just let me just confirm. Grega already left. Kman, what are you thinking here for weekly unemployment claims? Anything going to move the needle here?
Unless it's above 260 or below 220, I don't think so. I just want to say it just feels like a little bit of an odd day to me today. So I'm going to rather sit on the sides. I was long dollars, and I covered the dollar CAD yesterday, and I was pretty lucky to have that bad jobs report in the Aussie to get my Aussie back well below 63, 64. And now the only thing I'm keeping is my dollar China, because I don't think that interventions, unless they really want to put it back down sub 720, 728, are going to change it much. I think we're a bit more in a range, but overall my dollar feeling is still bullish for now.
Yeah, I forgot to mention this. I don't think we talked about it, but yeah, there's some Chinese PBOC headlines about the CNH, right?
Yeah, not only that. Yeah, they said they upped their interventions via their local banks. This is something funny, because the CNH now, we have to watch what the band is in dollar CNY, and the top of the band today is 735 and a bit. And as on the approach of that level, they decided to come in the market and sell dollars and comment, send out a lot of comments. That is one. The other one, where before Jackson Hole, and I think it's not on purpose, the BRICS countries will meet from the 22nd to the 24th. And I'm really paying close attention to that, because there is a possibility that they expand the BRICS countries. And one of the countries that is perhaps one that we really should keep an eye on if they join is Saudi Arabia. And I think they did it on purpose to go before Jackson Hole. And if they can convince Saudi Arabia to join, although there is a bit of tension between China and India, as we know, but that could be a big one. And I think that may be a mover for the start of next week, if we hear anything special out of those meetings.
Great
22nd.
Great comments.
That currency is supposed to be launched during that period, right?
Yeah, they are looking at least announcing a joint BRICS currency. It's if they name it BRICS, then watch out for your windows. Huh?
I got that one. All right, thanks, Kman, and I think that is the good wise words there, especially you know, that is something that could move the market. I think, you know, it's obviously up for debate on, you know, how many countries would adopt anything like that. I mean, this is, you know, but it's something that could move the market. So I think it's definitely worth noting. Ryan, weekly jobless claims. You expecting anything here?
I expect it to start with a 2 handle.
That's really going out on a limb. Now we should recall, and just I guess going over to the, you know, weekly unemployment claims, looking at the data. You know, we've had a couple of spikes higher in the number over the course of the last, you know, few weeks. You can see, let me go back a little bit further. You know, you can see the spikes up to 260, you know, 260,000, then it dipped back down. And so as Kman said, you know, 260 might be the line in the sand that people start looking at. Do you think we're going to breach it today?
Who knows? It's anyone's guess. It's as much a lottery as the NFP. I don't think you got to worry unless we're seeing numbers above 300. And I don't think you're going to see more hawkish unless the numbers are below 200. So 200 to 300, anything in between, there's not much to do with that, I don't think. We're all waiting for a a collapse or a proper bad number in jobs, and it's just not coming yet. So that'll be my marker, 300. Start seeing prints above that, then maybe we've got some trouble brewing.
By the way, I had an order out overnight to sell $yen down here. Thank you, and that's why it was already canceled. But you can see the 618 retracement there. I forgot it. We were just close on the time. Thank you very much. So the number was what? I'm sorry, I forgot. I didn't have my I was a little
239. Nothing
to
hang about.
Got it. All right. So dollar firmed up just a little bit. Go ahead.
Improvement in the Philly Fed, up 12 from -10 expected.
And hence the reaction that we've seen in the $yen. And how are stocks taking it this morning? Well, stocks are just kind of, S&P is just kind of grinding higher a little bit. Now, there was the Walmart earnings were out this morning that gave the Dow initially a nice little boost this morning, and then we've seen it come off. So I have, since we've been here, I haven't been paying attention to what's happening with Walmart, but that was the little bit of a mover earlier this morning as I was getting in front of the computer. So just keep that in mind as well. So, hey, guys, gals, I want to thank you all for joining. Dale, Ryan, Kman, myself, and Grega, who was here, but he already dipped away. And I want to thank you for being with us every day. Dale, is your interview here?
Yes, Steve is already been promoted. Ready.
Fantastic. All right. Well, have a great interview, folks. Thanks for joining us. Make sure you stick around for Dale's interview with Ask Slim. So
yeah, we'll ask him what kind of diet he's on to stay slim.
Yeah, because I need a slimming diet myself, actually. Thank you.
All right. Well, thank you, team. Kman, Ryan, Blake.
Cheers, guys.
All right. Cheers, man. Steve, hi. Welcome back. How are you?
Hey, good morning. Good morning. Good to see you.
Good to see you, Steve. Some interesting action we've had here.
Certainly is.
I watched.
Probably the first comment is that you made on the diet and the slimming thing. I've actually been on a program for almost a year, and it's been fantastic. So yes, I've lost weight, and I am slimmer. I used to be slim.
Turn the camera on and let's see. Sometimes where'd you go? Oh, there you are. All right, look at that guy, handsome guy. So is it, what kind of diet is it?
Actually, I went on a variation of paleo primal. So I stopped
a lot
eating
of protein.
I stopped eating grain completely. I haven't eaten grain in 11 months. Yeah. Very little added refined sugars, and almost none, and no lentils either. So basically, I live on really fresh stuff, chicken, turkey, all kinds of vegetables, fruits, nuts, all of those things. So it's been great. I haven't really veered off of it for 11 months. I'm down about 20 pounds, and I don't feel like I'm on a diet. It's just been great.
Okay. Yeah. You found something that suited you.
Yeah.
So,
really
I caught one of your videos, I don't know, a week or so ago, and you were talking about that it was due this week, some type of little rebound high that may or may not make a new high. Then you're looking for down and a pop in the VIX. My takeaway was that you're viewing this as just a correction. You're in the correction camp.
I'm viewing this as a correction in the market, but while I am looking for, a pretty good decline still, I'm not really sure about the quality of the advance after that. I know a lot of people are looking for, potentially new highs in the stock market. I have not been. And if you watch my video from the beginning of the year, when I did the big pictures, I looked for a bull market year this year, but maybe only the Dow making a new high. The NASDAQ improved some, so that was possible. But I really think that we're in a secular bear market, and this is just a cyclical bull. I think we're back into the 1970s right now. or similar to the 30s or 70s, which were secular bear markets that lasted about 13 years. So I think that we're a few years into that right now, and maybe another 10 years of a really challenging time for investors.
Okay, great. So I'm glad I had you on because I think the battleground is going to be about, I don't know, a little bit under 4,200, maybe for this first decline.
Yeah, I can show you my weekly charts
sure.
are reflective of that if you would like to see that.
I love your charts, Steve. I don't know what I do for 4 months, 4 months.
You can see, can you see my charts now on the S&P 500?
Yes, got them. Got them
Okay,
both.
good. Okay, so on the left side is the weekly chart, and on the right side is the daily chart, and I'm going to blow up the weekly chart so that you can see. For those of you that are new to our charting style, this is cyclical analysis, where we look at the rhythms or the heartbeat of the market. On the bottom are a drawing tool, cycle brackets, that just simply gives us the average harmonics in the movement. And this is money flow. This is really what it is. And when a cycle is bullish, as you see right over here, by having a higher bottom, the probabilities are high of making a new high as it moves up, which is exactly what happened. Beginning of the year, we were unsure whether this was going to get tested down over here on the low, but then it became clear it wasn't as it turned up from the supports. And now you can see these yellow zones. That's where you're in corrective periods, where both of the cycles are moving down. And that's what you have right over here.
Right.
So we actually were looking for this corrective period to occur. Now, our proprietary momentum indicators, you can see right over here, this has been the positive momentum where our reversal scout was positive in green and moving up. And this is where it is turned down right over here, indicating to us that this cyclical correction is now in the works. So what we're looking for is a decline out into the period of mid-October. That's because,
you know, there's an eclipse then too, Steve. So that's a little confluence. I've seen a lot of emotional lows and highs on it's an annular.
I don't really follow that, but that's interesting.
Yeah.
So you can see our targets over here. This is around 4,300. This is 4,200, and this is right around 4,110 or something like that. So that would really be the targets with troughs in the area of October. And then over here, the next rally phase, which takes you out into the end of the year. And you can see I don't really have it right now drawn going up steeply. I don't really know how low this trough is going to be here out in October. And I'm going to switch over to the daily chart right over here. This is giving us some interestingly negative messages because what we were looking for was a rising phase. And as you said, you saw my video where I was looking for a rally and then more down. That would match this declining periods out over here, which take you out into October. However, this is extending down. And you can see I have two different scenarios in here, which is maybe it's already had this period. We call this a left-hand translation, and it's just under so much pressure from the intermediate patterns that it can't rally, or we get a little pop up in here for the next week or so, and then it turns down again. And this is just extending. It's a little early for me to know that, but no matter what, it is a negative condition. You can see down over here on our very interesting slim ribbon PO, which this is called. This was positive. You can see it's green with these arrows giving you the upward resumptions. And then it neutralized, and now you can see it's turned red. And that's the first time since back in April that it has done that. So these are some very negative indications for the stock market.
Could we have a crash, Steve?
Well, you get crashes.
Is it set up for that like a mini crash?
You get crashes in time periods where the cycles are aligned on the downside, and you have that right over here. Now, because of the configuration and how far we are from that cycle low, way down over here at 3,800, 3,750, then the probabilities of that are small. But the time frame for a big decline, the window is open right now. So that is a possibility, as we see in here. You know,
because there are a lot of things going to March levels. What's happening in the Chinese currency, what's happening in the yen. They're almost back to where the market was when it turned in October.
You know,
So
that's true, but you have to also look at very different circumstances in those countries and where we are right now. So it doesn't mean that, you know, you can't get their, you know, Chinese deflation exported to us, because with the yuan getting so weak, they certainly could be exporting their deflation to us. If that were the case, the bond market would be screaming. And the bond market right now is much more reflective of disillusionment in the recessionary scenario. So,
or is it supply?
Well, I mean, it's both really, because the government really has, you know, $1 trillion to refill in their coffers.
Right.
And the fact, you know, that also fights against the fact that the government is so insanely stimulating through printing, creating of money, while at the same time they're tightening through their other aspects. So you have this, you know, strange, really fight that's going on between different parts of the government. And, you know, the consumer is still strong based on the fact that they pump all the money in that they could back a few years ago, and that's still out there.
That's hard to believe.
Well, it's weakening, and you can see
for
that
the average guy.
The average guy,
you know, I mean, they stopped sending checks 2 years ago. People may say they were getting an extra $2-3 grand a month, not the people who ripped off the government for the getting paid for each employee they never had.
So what you're saying is makes it even more likely, since the markets and investors are thinking that we're only going to have a soft landing or no landing, that actually what we're going to have is a very hard landing, because eventually the consumers are going to run out of money. If you look back at what Volcker did, you know, inflation's not going away really, and you're likely to get the Fed to keep doing what they're doing, which is kind of covertly raising rates in a maybe less intense fashion, but they could be raising rates all the way through 24. We don't even know, unless there is a very sharp downturn. So
why would they stop unless we were, you know, had a big break in the market?
That's
and
the
the
only
banks,
way.
Steve, the banks, the XLF really didn't make much hay.
No.
Those were the money center banks, and they don't look that much better than the regionals.
I mean, if you look at the Russell is really taking it right now, and of course
it's ugly.
The Russell is very reflective of the banking that's going on, the small banks. And if you look here, I mean, we're looking for a decline out over here into late September, early October also. So this is really a pretty negative scenario.
It's precarious. It was a rectangle while everything was making huge retracement moves from all-time highs. All the Russell did was move sideways in a range for a year.
Right. So I mean, I'm thinking that, you know, all of the information that we're getting right now is saying that, well, if there's anything that will be a surprise, there's actually going to be quite a hard landing. And if that's the case, what we're going to see is the bond market turn around and begin to move up sharply, and we will see the dollar start to collapse. And I think the dollar, I'm going to switch over to the euro here for a second, because I heard
that'd be great.
I heard you guys talking about it, and our US dollar is what I'm putting up right over here. And this shows you that we're in a very interesting period cyclically, because the cyclical rhythms, and remember the left is the weekly cash. You can see right over here, there is a major trough in a very bullish formation right in here. So the euro is very due, you can see the buy zone listed right over there. The euro is very due to bottom. Now you can get some chop over here out into sometime into September before the euro really starts to be able to move up. But then I think what you're going to see is some a pretty good upside movement in here, and some pretty good downside movement in the dollar. I think the dollar only has a minimal amount of rally left in it. And I'm going to show you a monthly chart that I don't really show normally on when I put this up on social media, but I'm going to blow this up right over here. This is the magnificence of the cyclical harmonics that you see here in the dollar. And each of these time periods where there were, the harmonics were pointing to corrective periods, that's these yellow zones right over here and here. There was a major breakdown in here that said we're already in this corrective period. And while the intermediate pattern suggests it could get up to 104 or 104.5, this is a period where I'm telling you that the euro is getting ready to bottom, that the dollar could get slammed. And the support here is at 94. Maybe it's the BRICS. Maybe it's the fact that interest rates will begin to move down sharply because it's really going to be a hard landing. I'm not really sure what I see in there, but this is a period right over here. Now I'm going to blow this out a little further. There's a note here similar to 2006 where there was a breakdown. If you look over here, this pattern in 2006 right here is identical to the pattern right over here. And what happened was that after it broke that support, which it did here, it got a little bit of a rally and then collapsed. That's what happened right over there, as Greenspan essentially killed the dollar back in that period. So this is a period right in here that is suggestive that this rebound we're having in the dollar is likely to fail, and that the market in the dollar is likely to have a sharp decline. And of course, that sets up a bullish period for the metals also, which I think has been, it has been delayed. The patterns in there are not looking great on the metals right now.
No, they're not.
But that's just, a period where this, I think, artificial support has come in for the dollar because of the belief that interest rates now are not really going to go down, or there's not really going to be a hard landing. So, but I think that's all going to change. And I think it's all probably in weeks ahead that we're going to see some changes in that.
Okay. Interesting. Any other asset class you want to cover? You have a view on oil?
I do. I can show you a /CL, which is the oil market right in here. And I'm just going to put up the side by side for you to see. And what we're looking at here are is a bottom getting ready to form on the daily right over here.
Okay.
But you see the lateness and the this evening star pattern on the weekly.
Yeah.
And it points to a continued corrective period out over here into September. That's this minor cycle right over here. And if I highlight this cycle, it will give you the date of that next trough that we're looking at. We get that to come up. So that's September 29th right there. So that says it's likely to try to rally and then come down again into this September period out over here, maybe beginning of October. That's this cycle right over here. And then you could see, based on this extremely positive formation and this giant inverted head and shoulders, that it could get all the way up here towards 100. This is 98 up there, where that major resistance is. So I think that come Q4,
nice look,
that oil really has a potential to move up very sharply on the upside.
Okay, so basically the takeaway is that what's been going on now can last until late September, mid-October, and those are going to be important inflection points to watch across the board. I think
so, and with the potential for the euro currency to get ahead of them and to get into a choppier, more supportive period right now. And then when the dollar, I think, heads significantly lower, of course, that'll be influenced by maybe several things, but certainly the euro currency beginning to move up significantly. Interest rates.
Would you expect foreign markets to outperform, Steve, when this move starts to happen in the dollar? It's usually risk on in equities with a weak dollar, but could we get to a point where it's too much of a good thing and the market doesn't like a weak dollar, that it's flight capital away from US dollar denominated assets into other markets?
I think that is going to happen next year.
Okay.
I don't think it's happening this year.
But could we have a weak dollar and a weak equity market here in the US at the same time? Because it hasn't been that way.
You can, and I think that would be in the time period where it's very obvious that we're in a period of de-dollarization.
Okay.
And certainly the, look at India and the UAE now doing business in oil and rupees, so
they're trying to get Saudi to join the BRICS.
Yeah, and they're probably going to also. So
that's a real bearish thing for the dollar. It was petrol currency.
The US dollar has been, I don't have to tell you how it's been destroyed over decades. And right now, it's just simply in this window of time where it's getting a little bit of a lift. But
Steve, sometimes I wonder if that the savings bonds that I got for my bar mitzvah, if I should have hedged them back then. Do you think the dollars are, worth a little bit less, even though we're having a dollar rally now, than the dollars I had at my bar mitzvah?
97% loss of buying power since your bar mitzvah. So if you still have those, they're probably not going to buy what they bought back then.
Yeah, and some copper company that went defunct.
What year was your bar mitzvah? Give it away.
Okay, 1966.
Mine was 1963, so I'm 3 years older.
Okay, all right. Well, look, this is what happens when two pro-veteran bar mitzvah boys get together and talk markets. You guys just saw it today for over 50 minutes.
Right. Well, I've been, became a member of the CBOE in 1974 in May.
Okay.
So I'm in my 50th year as a trader.
We should have met each other. I was at the Merc in 76. So anyway.
I was at the Merc there also. So there you go.
Yeah, kindred spirits. Steve, great. I really appreciate your giving spirit for showing your work. And one thing I could say about Steve, he's honest. He's kosher. He's not going to give you poison. And check out his work. It's very enlightening every time I look at it. So
yeah, I'd like just to mention everybody should just go to askslim.com and take a look around there. Become a free member. And
want to show your website quick? You want to show it?
I don't think I have it set up to show to you, so I won't do that right now.
Okay,
but yes,
AskSlim.com is the website, just like your Twitter handle at AskSlim.
That is correct.
All right, Steve. So appreciate you being with us here today. L'chaim, brother.
All right, good to see you. Take care.
All right, buddy.
Okay, bye-bye.
Ask Slim, Steve Miller, everybody. Hope you enjoyed it. You could join the team in about 17 minutes, 18 minutes on the morning edge. Steve, good hunting, and talk to you in the fall or winter. See how things played out.
All right. Be great. Take care.
All right, everyone. My trading warrior brother, Steve Miller. Adios, everyone.
Take care. Bye-bye.
Take care.